JJ the CPA here. Hope you're doing well. I just want to give some top tips to those filing Schedule C. This goes with your individual return. Schedule C is for those small business owners that are not filing a separate tax return. It may be that you're an LLC, single member, filing a Schedule C, but for sole proprietors, those that have a side gig, this is what you file. And what I want you to note is that this Schedule C is a firecracker because whatever that net income is on your Schedule C from your business, it is going to be also subject to a 15.3% self-employment tax. That's in addition to your income taxes. So it's crucial that you properly know what expenses you can take, not only to reduce down your income tax, but to reduce down your self-employment taxes. I'm just really, unfortunately, not a fan of you doing your own tax return if you have a side business and you're filing Schedule C, because it's just too easy for you to miss deductions. So if you missed even a $1,000 deduction, that would cost you about $153 in self-employment taxes. And let's just say for grins, that costs you another $150 in regular income taxes. So that's $300 plus. And what would it cost to have a good tax pro helping you to ensure that you don't miss out on these deductions? So here's some top ones that seem to get missed or misunderstood, or many are afraid of, which you shouldn't be. Home office. With that, there's an up to $1,500 simplified method right there on page 1 of Schedule C. Also in there, it is up to $5 a square foot times 300 square feet. And with that being said, what's the real key here? That you're using a space in your home regularly and routinely for business. With that, if that's happening, then you really need to investigate whether or not this is a deduction you should take. And the short answer is, if you qualify, then you should. It's not a flag. It's not something you need to be afraid of. And even if it got questioned, well, you just show them your documentation and you get to keep the deduction. So it's not anything that you need to be worried about. Also, on the vehicle deduction, here's the deal. Every year, you get to decide what method you want to use. So you can use actual expenses, or you can do the standard mileage rate. So what happens here is you take your personal vehicle, and if you have multiple vehicles, then you're making this decision per vehicle. But you take that vehicle and you go, well, how many miles did I drive in the year, and how many of those were for business? That is now the biggest part of this calculation, and it's going to work for both, because right there off the bat, you know what your business miles are, so multiply it by the mileage rate. That mileage rate in 22 is 58.5 cents per mile in the first 6 months and 62.5 cents per mile in the last 6 months of 22. Now, just as a side note, it's 65.5 cents for 2023. So you take your mileage, you multiply it by the rate, and you go, boom, that's my starting point. And now you take your actual expenses, which is the depreciation of the vehicle. And there's some sexy depreciation available for over 6,000 pounds GVWR trucks and vans and SUVs for those vehicles that are 6,000 pounds or less. Also, not as sexy, but pretty good deduction. So I'm going to give you a link in the body of this video where I talk about that. But your actual expenses would be the depreciation, your interest expense, gas, oil changes, interest, repairs, new tires, right? So everything related to that vehicle. Now, you've already done the work. You know the total miles that you drove for the year. You know the business miles that were driven. Well, you take that as a percentage. As example, you drove 20,000 miles in the year. And if 16,000 miles was for business, well, then that's been driven 80% for business. So after you add up your actual expenses, then that amount times 80% would be your deduction. And then you do a simple comparison. Which deduction is higher? In my example, is 80% of the actual expenses higher than that mileage rate? Well, then you would do that. So with that, take your time. This is another reason it'd be so important to have a tax pro. Now, I'm not really a fan of a tax pro that tries to scare you and talk about IRS audits and flags because you file Schedule C and you're doing miles and all that. That's really just somebody that doesn't actually know what they're doing. And the only way that they convince you to do what it is that they actually know is to somehow get you scared. So with that, it's just like what I was telling you at the home office. If you have the business miles, you have the documentation, even if somebody convinces you it's a flag, who cares? Everybody goes to a sporting event and absolutely expects a ref to make a call on every play, right? That's just the same with the IRS. Also, I want you to think about the meals that were related to business. You get 100% of those. Your cell phone, right? I want you to go through your personal bank statement. I want you to go through your personal credit card, and maybe that's all you have, but go through it. It is worth the time and effort to see what expenses that you had that maybe you don't remember that you are able to deduct. You want to have your receipts to back these things up, and with that, and showing that it's for business, you really shouldn't have that much to worry about related to this. So what are some of the other things that I can deduct, JJ? Well, I'm glad that you asked, because that means you now need to get a tax professional, because it really comes down to this. Sky's the limit. No, I don't mean you can just deduct anything. Sky's the limit as in the IRS says under Code Section 162 that if the expense is necessary for your business, ordinary and necessary, and your intent for spending that money was for business purpose, then it's going to be a deduction for you. So how could you deduct pink ballet shoes? Well, if you're a ballet studio, no problem. How could you deduct a motorcycle? Well, I'm going to let you think on that one, because there's a way to do it if you have a business, and I'm not telling you to read between the lines. What I'm telling you is pick it, and if it's related to your business, there's no wink I'm giving you. What I'm saying is if it's related to your business, it's a deduction. So with that being said, feel confident that if you have the documentation, that you would be able to take the deduction. The other aspect is when you're gathering up your expenses, don't get too caught up in, well, wait a minute, is this office expense or office supplies? Because again, what the IRS is mostly concerned about is that a deduction? Now, if you have a tax professional, or for you, fellow tax professionals, that somehow right now you're all up in arms because I'm talking about you should not be scaring your clients about Schedule C, then what's the solution to that? Besides having your receipts, by making sure that everything's properly taken care of. Stop filing Schedule C. You're right. There's a lot of options to that. So I'm going to give you a link in the body of this video that talk about your other options. Why would you stop filing Schedule C? Watch the videos, and when you see, you'd go, wow, that makes a lot of sense. So maybe make 22 the last year you ever file a Schedule C. You want to know more? Hire a tax pro. All right? All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a small business owner, self-employed, quite like you. So get a tax pro and demand that they be a good person that's helpful, that doesn't scare you, makes you feel comfortable, tells you what you can and cannot do, so that you can pay your fair share of tax, no more, no less. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.